Well, ladies and gentlemen, welcome back to Boss Economics World, the only show that takes the dismal science of economics and turns it into a full-blown circus of absurdity. I'm your host, the one, the only, Professor Profit, here to break down the latest economic dumpster fire with a side of satire, a sprinkle of data, and a whole lot of shade. Today, we're diving headfirst into a golden mess, literally. The US government has decided to slap tariffs on 1 kilogram gold bars, threatening to kneecap the bullion market and give Swiss traders a one-way ticket to Panic Town. Oh, and guess what? It's all thanks to a little bureaucratic oopsie by US Customs Border Protection. Grab your popcorn, folks, this one's gonna shine brighter than a gold bar in a rap video. Now, before we get into the nitty-gritty, let's set the stage. Gold, shiny, heavy, and the ultimate flex for doomsday preppers and central bankers alike, has been the belle of the financial ball for centuries. And 1 kilogram gold bars. Oh, honey, those are the VIPs of the bullion world. They're the most traded form on COMEX, the world's largest gold futures market, and they make up the bulk of Switzerland's bullion exports to the US. But here's the kicker, the US government, in all its infinite wisdom, decided to classify these bad boys under a customs code that's subject to tariffs. Tariffs, people. You know, those pesky little taxes on imports that President Donald Trump, yes, that Donald Trump, loves more than a well-done steak with ketchup. Now, the industry was expecting gold bars to be exempt from these country-specific tariffs, because, duh, gold is gold, right? It's not like we're talking about Chinese steel or Canadian lumber. But no, Customs Border Protection had other plans. According to a ruling letter dated July 31, 2025, shout out to the Financial Times for digging this up, 1 kilo and 100-ounce gold bars are now fair game for levies. And the fallout? Oh, it's juicier than a reality TV reunion special. Premiums for gold futures in New York spiked over $100 an ounce above the global spot price benchmark in London as markets opened in Asia on Friday, August 8, 2025. Translation, chaos, confusion, and a whole lotta expensive gold. But here at Boss Economics World, we don't just report the news, we dissect it, satirize it, and serve it up with a side of economic truth bombs. So, buckle up, because we're about to go from the surface-level drama to the deep, dark underbelly of this golden fiasco. Let's break down the economic issues behind this incident, point by point, and sprinkle in some fresh, piping hot data to keep things spicy. Ready? Let's roll. First up, let's talk about the obvious, tariffs. Tariffs, the economic equivalent of throwing a tantrum in the middle of a grocery store. For those of you new to the game, tariffs are taxes slapped on imported goods, usually to protect domestic industries or to flex geopolitical muscle. And if there's one thing the Trump administration loves, it's flexing. Remember the US-China trade war of 2018 to 2020? You know, the one that cost American consumers an estimated $40 billion a year in higher prices, according to a 2023 study by the National Bureau of Economic Research. Yeah, that was Tariff Central. Now, fast forward to 2025, and it looks like tariffs are back on the menu, boys. But this time, it's not just steel or soybeans, it's gold. And not just any gold, but the 1 kilogram bars that are the lifeblood of the global bullion trade. Here's the kicker, Switzerland, the land of chocolate, watches, and apparently gold bars, is getting caught in the crossfire. According to the World Gold Council, Switzerland exported over $30 billion worth of gold to the US in 2024 alone, making it one of the top suppliers. And now, thanks to this tariff ruling, those exports are about to get a whole lot pricier. But wait, there's more. This isn't just about Switzerland. The US decision to tariff gold bars could ripple through the global bullion market, driving up costs for everyone from central banks to your cousin who's hoarding gold coins in his basement. And let's not forget the irony here, the US is one of the world's largest gold producers, with output hitting 170 metric tons in 2024, per the US Geological Survey. So why tariff imported gold? Is this protectionism, geopolitics, or just bureaucratic incompetence? Spoiler alert, it's probably all three. But don't worry, folks, we'll get to the juicy conspiracy theories later. Now, let's zoom out a bit and talk about what this tariff mess means for markets. Because, oh boy, the markets are not happy. When news of the tariff ruling broke, premiums for gold futures in New York shot up by over $100 an ounce above the London spot price. For the uninitiated, that's what we call a market distortion, a fancy way of saying the price of gold is going haywire because of artificial meddling. Here's how it works, gold futures are contracts to buy or sell gold at a set price in the future, and they're traded on exchanges like COMEX. Normally, futures prices are pretty close to the spot price, the price of gold for immediate delivery. But when you throw tariffs into the mix, you create uncertainty, and uncertainty is to markets what catnip is to cats. Traders start panic buying futures to hedge against higher costs, driving up premiums. And who pays the price? You guessed it, everyone. From jewelry makers to tech companies that use gold and electronics, to central banks stockpiling bullion, the cost of doing business just got a whole lot shinier. And let's talk data, shall we? According to the World Gold Council's Q2 2025 report, global gold demand hit a record 1,258 metric tons in the first half of the year, driven by central bank purchases and investor fears of inflation. Now, with tariffs jacking up the price of imported gold, that demand could either skyrocket, because gold is a safe haven asset in times of chaos, or tank, because, well, who can afford it? Either way, volatility is the name of the game, and volatility is bad news for anyone trying to plan a budget, whether you're a Fortune 500 company or a small-time investor. But here's the real kicker, this tariff ruling could undermine confidence in the US as a stable hub for gold trading. I mean, if you're a global bullion trader, are you really going to trust a market where the rules can change overnight because some customs official decided to reclassify your product? It's like playing Monopoly with someone who keeps rewriting the rulebook. Not cool, America. Not cool. Now, let's take a moment to pour one out for our friends in Switzerland. Poor, neutral Switzerland, caught in the crosshairs of yet another American trade tantrum. As we mentioned, 1 kilogram gold bars are the backbone of Switzerland's bullion exports to the US. According to the Swiss Federal Customs Administration, gold exports to the US accounted for over 40% of Switzerland's total gold exports in 2024, worth a cool $30 billion. And now, with tariffs looming, Swiss traders are facing higher costs, lower margins, and a whole lot of headaches. But it's not just Switzerland feeling the heat. The COMEX, the world's largest gold futures market, is ground zero for this tariff drama. 1 kilo bars are the most traded form on COMEX, and any disruption to their supply chain could send shockwaves through the global financial system. Think about it, COMEX is where banks, hedge funds, and institutional investors go to hedge their gold exposure. If tariffs make it harder or more expensive to deliver physical gold to COMEX vaults, you could see a breakdown in the futures market, leading to, you guessed it, more volatility. And let's not forget the geopolitical angle. Gold isn't just a commodity, it's a strategic asset. Central banks around the world have been stockpiling gold at record levels, with global purchases hitting 1,037 metric tons in 2024, according to the World Gold Council. Why? Because gold is a hedge against currency devaluation, inflation, and geopolitical instability. So, when the US starts throwing tariffs around, it's not just a trade issue, it's a signal to the world that the global financial system is becoming more fragmented. And in a world where trust is already in short supply, looking at you, US-China tensions, this is the last thing we need. Now, folks, it's time for everyone's favorite segment, Conspiracy Corner. Because let's be real, nothing in economics happens by accident, right? So, why is the US government suddenly tariffing gold bars? Is this just bureaucratic incompetence, or is there something more sinister at play? Here's one theory, protectionism. The US is a major gold producer, with companies like Newmont and Barrick Gold churning out millions of ounces a year. By slapping tariffs on imported gold, the US could be trying to give its domestic producers a leg up. I mean, why buy Swiss gold when you can buy good American gold, right? But here's the problem, the US doesn't produce enough gold to meet domestic demand, especially for the 1 kilo bars that dominate the futures market. So, this protectionist play could backfire, driving up costs and alienating trading partners. Or, here's another theory, geopolitics. Gold is a strategic asset, and the US might be trying to flex its muscle on the global stage. By disrupting the bullion trade, the US could be sending a message to countries like China and Russia, which have been hoarding gold as part of their de-dollarization efforts. According to the International Monetary Fund, China's gold reserves hit 2,264 metric tons in 2024, while Russia's reached 2,332 metric tons. Could this tariff be a way to throw a wrench in their plans? Maybe. But if so, it's a risky move, because it could also alienate allies like Switzerland and destabilize global markets. Or, hey, maybe it's just incompetence. Maybe some overworked customs official misread a memo and accidentally reclassified gold bars under the wrong code. Stranger things have happened, right? But whether it's protectionism, geopolitics, or just plain stupidity, one thing's for sure, the fallout is gonna be a mess. Now, I know what you're thinking, Professor Profit, this is all very interesting, but what does it mean for me, the average Joe or Jane who's just trying to pay the bills? Well, folks, here's the bad news, this tariff drama is gonna hit you where it hurts, your wallet. First, higher gold prices mean higher costs for anything that uses gold, from jewelry to electronics. According to the Consumer Technology Association, gold is a key component in over $300 billion worth of tech products sold in the US each year. So, that new smartphone or laptop you've been eyeing? Yeah, it's about to get pricier. Second, if you're an investor, buckle up, because the gold market is about to get wild. Gold is already a volatile asset, with prices swinging by over 20% in 2024 alone, per Bloomberg data. Now, with tariffs adding fuel to the fire, you can expect even more turbulence. So, if you're thinking of jumping on the gold bandwagon, make sure you've got a strong stomach, and a good financial advisor. And finally, let's talk about the bigger picture. This tariff ruling is just the latest example of how trade wars, protectionism, and geopolitical tensions are making the global economy more unpredictable. Whether you're a small business owner, a Wall Street trader, or just someone trying to save for retirement, this kind of uncertainty makes it harder to plan, invest, and thrive. So, thanks, US government, for reminding us that in the game of economics, chaos is always just one bad decision away. And there you have it, folks, the golden mess of 2025, brought to you by tariffs, trade wars, and a healthy dose of bureaucratic brilliance. From market distortions to geopolitical power plays, this story has it all. But here at Boss Economics World, we don't just report the news, we turn it into a cautionary tale wrapped in a satire sandwich. So, what's the moral of the story? Well, if you're a policymaker, maybe think twice before slapping tariffs on a global commodity like gold. If you're a trader, buckle up for a wild ride. And if you're just a regular person trying to make sense of it all, well, maybe it's time to start hoarding chocolate instead of gold, because at least chocolate won't get tariffed. Until next time, this is Professor Profit, reminding you to keep your wallets close, your skepticism closer, and your sense of humor closest of all. See you in the next economic dumpster fire.